My name is James Lenhoff. I'm the Assistant Commissioner for the Multifamily Division here at Minnesota Housing. I use he, him pronouns. And thank you for sharing your time with us today. I know that everyone has very busy schedules. I alluded to that as such, even those running between meetings. To preempt the question, though I think one might already be in the chat, is that we will be sharing both the slides and we are recording the presentation, both of which will be posted on the Minnesota Housing website for review afterwards. Before we get into the details of the presentation, where I wanted to spend a quick moment here is just acknowledging that how tough it really has been for so many organizations. Many were hit hard during the pandemic and the social unrest, and the reality is that many organizations have still been hit hard. It has not become easier. In fact, it's probably an understatement, and I'm not just talking about the cash flow aspects of it, which hopefully this program will be able to assist with for those eligible organizations, but also on the people that are involved, whether it's staff, property managers, leaders in various organizations, certainly the residents, but the support systems, and so many others. So thank you for sharing your time today. I recognize that that is in and of itself an investment. All right. Hopefully my presentation will go to the next slide here. Excellent. Okay. So I suspect that this hour is going to fly by rather quickly. I'm also going to acknowledge that I'm probably going to break one of the cardinal rules of PowerPoints and have a fair amount of text on the screen, and there will be times where I'm reading some of the text on the screen just to make sure that the information is conveyed accurately. As I just noted, or if you just joined the meeting, we are going to post this presentation on a Stable Housing Organization Relief Program webpage that will be launching on our Minnesota Housing website very shortly, maybe yet today. Or tomorrow. We will send that link out to all the attendees so you don't have to go searching for it. And we, as I noted, we will post both the PowerPoint and the recorded presentation on the website. Depending on how much time I use up here for the presentation or what some of the questions are, we will take questions at the end. I will acknowledge, since this is a program in development, some of the information may still get adjusted by the end, certainly depending on what some of the questions are could influence that part of it. And if I'm not able to answer a question today, we do plan on putting out an FAQ related to this. So we'll be sure to write down the question and do our best ability to answer it there. You are welcome to use the chat to post questions. We are recording the chat as well, so that we have a record of that information to be able to use with an FAQ. I don't anticipate answering questions until the end for the questions that I am able to answer. I suspect that a number of items that may come up will probably get addressed at some point during the presentation. It is a full agenda for this next 55 minutes. We're going to cover the authorizing statutes and program purpose, the anticipated timing, the types of eligible organizations and eligible expenses, the funding allocation formula, what the request for proposals process will look like, reimbursement, closeout financial audit, and then again, as I noted, if there is time for questions at the end, and either way, we will be taking questions, even if we're not able to get to all of them. So first, the program purpose. For those of you that are not familiar with the Stable Housing Organization Relief Program, it was approved at the end of the recent legislative session as a one-time grant program with funding of up to $50 million in state appropriations. And the purpose is to support eligible rental housing owners that have experienced significant detrimental financial impacts due to recent economic and social conditions. And that is pulling the language directly from the statutes. There were several related authorizing statutes. Don't worry, I'm not going to post the statute language right here and read through that, but we will provide the links on the webpage for those that are interested in reading those sections. All of the information that is shared today and the information from the statutes are being incorporated into a program guide. That program guide will be presented to the Board of Directors yet in August, as I'll note on the timeline here in a moment. And that will guide the program both through the RFP process, through operations, and through closeout. And just to reiterate, as I noted, information in this presentation is subject to change in the final program guide based on the questions that may come up, any questions from our board, and as we work to finalize the language in that guide, which I'll talk about the timing for that here in just a second. Before we get into the technical aspects of the program, just an overarching note, and I underlined it for emphasis, is that this is a grant program. And while that may not come as a surprise for those of you that have been tracking the legislation, it is important because many of our multifamily partners are accustomed to working with Minnesota Housing on loans. And loans and grants are treated differently in statutes, and grants do come with some very specific provisions. For example, we are required to follow the Minnesota Department of Administration Office of Grants Management policies. I can post a link to that on our webpage as well. It is necessary for us to host this through a competitive request for proposals process. For those eligible applicants, there is a funding allocation formula based in statutes, which I'll have some examples for as we get farther in here, and the funding selections, and those allocations are subject to approval by the Minnesota Housing Board of Directors. As part of a grants process, we will have a grant contract agreement for all of the eligible applicants that are selected that must have a work plan and budget. And the grant funds are dispersed on a reimbursement basis for eligible expenses only. So the funds are not provided up front. They are based on a reimbursement process. Now, for the anticipated timeline, today is August 3rd, I hope, since we are having this informational session. On August 17th, as part of our board packet distribution, we will be posting the proposed program guide on our agency's website, and the board will be reviewing the proposed guide at their meeting on August 24th. If approved at that meeting, we do anticipating issuing the request for proposal shortly thereafter. We will talk about that today, what we anticipate being the submission requirements for that. Agency staff will review those application materials that are submitted in September and into October, and then we anticipate making recommendations to our board of directors at our October meeting on October 26th, at which time then we can start finalizing grant contract agreements and move towards the funding disbursement process. The other two dates that I put out that are a little bit farther out, but we all know time goes really fast, is that there are two statutorily required reporting deadlines. I'll talk about these in a little bit more detail towards the end of what is going to be needed, but that there is a statutory requirement to prepare for all the grantees to prepare a report and financial audit that is subject to Minnesota Housing review. All right. Eligible organizations. It is important to note that the eligibility for this program is fairly specifically defined in statutes. And starting off, there are two primary categories for eligible organizations. The first one being is that the applicant must be a tax-exempt nonprofit organization under Section 501c3 of the IRS Code. And that applicant must have been doing business in Minnesota for at least 10 years. So if you are a nonprofit that formed in the last year, that entity is not eligible for this program. And there is required, the applicant must be able to demonstrate that they have been in business for at least 10 years in Minnesota. Now, I know that there are a number of organizations, nonprofits, that may have changed names during that time period. That is just fine. We'll be able to accept information that shows how that name may have changed during that time period. The other applicant category is for federally recognized Indian tribes in Minnesota or their associated tribally designated housing entity. There was, as part of, again, the legislative outcome statutes that provided for an expansion of Minnesota housing programs to those entities across all of our funding programs. Also, those eligible applicants must have its primary operations located in Minnesota. Again, many of the organizations that will have interest in this program already has, or they are only doing business in Minnesota, so it may be a non-issue. For the handful of organizations that work in multiple states, we'll talk about what it means to have primary operations located in Minnesota here shortly. The applicant must be experiencing significant detrimental financial impact due to recent economic and social conditions, and the applicant must have supportive service options available for the individuals and families residing in a portion of the rental housing. So it doesn't mean that all of the rental housing has to have support services, but at least some must have support services. And then finally, but extremely important within the applicant eligibility in the statutes is that as of December 31st, 2022, the applicant must have sufficient housing that it owns or controls, and we will talk about what it means to own or control housing in a moment, in the state of Minnesota that meets the criteria of one of the following categories listed on the page. the applicant must have at least 1,000 units of naturally occurring affordable housing, or the applicant must have rental housing units, excluding NOAA, where at least 50% of their portfolio has housing that are being occupied by people that are at 30% of area median income, or they must have at least 250 units of permanent supportive housing, and the statutes actually do define that permanent supportive housing using the existing statutory reference, but there is a particular definition for that. There are no other categories for eligibility, so the organization must own or control sufficient units in one of those three categories. I will note with that entities like transitional housing, shelter housing, public housing are not eligible for the program, nor are for-profit organizations. So what does it mean to have primary operations in Minnesota? Again, if all of your business is in Minnesota, this will not be an issue for you. If you are part of an organization that works in multiple states, it should be noted here. But the nonprofit organization registered with the Secretary of State with a principal place of business located here in Minnesota. The Form 990s must identify Minnesota as their primary address. And if you do have housing in more than one state, at least 50% of that housing must be here in Minnesota. If you have particular questions, if your organization works in multiple states, again, we're going to have some technical assistance related to that once we release the RFP materials. I'll also note then for the federally recognized Indian tribes or their tribally designated entities that may choose to apply, they are deemed to have met that requirement since their operations are entirely also in the state of Minnesota. Now to owner control, which is a statutory requirement that we will be defining within the program guide, is that there are a couple provisions related to that. So what does it mean to owner control? For those of you steeped in ownership structures, you know that there are a handful of different structures out there, and we're trying to be very open in what gets included in that. So if you don't see your particular scenario here, just hold out till I get through the next couple slides. So first, and maybe obviously, is the property in which the housing unit is located must be in the state of Minnesota. So you can't count housing in Wisconsin or South Dakota or Idaho if you happen to be working in multiple states. Also, the property in which the housing is located, it must have been placed in service before December 31st, 2022. So properties that opened up in calendar year 2023 are not eligible. And the property must meet one of the three following categories. The property could be directly owned by the applicant. That isn't a terribly common scenario where a nonprofit chooses to own a property directly, but that certainly counts. What is more common is where properties are owned through a limited liability company, a limited partnership, or something similar. That is definitely acceptable within this program, as long as the other two provisions are also met. The applicant is the managing general partner of the LLC, which is often the case where the nonprofit or in some related form is the managing general partner, where they control at least 50% of the general partnership of that. And then also the unit in which the property is located is identified as a disregarded entity on their Form 990 or a comparable form that we can certainly look at here at Minnesota Housing. And then as I noted, just the broader category, because we know that there's a number of different ownership structures that we may not have contemplated directly there, is that where there are other properties where the applicant can demonstrate ownership or controlling ownership of a property, we can definitely consider that as part of this process. An example may be some Section 202 properties that are actually owned by a nonprofit and are controlled by another nonprofit. We are intended to capture that as part of the overall owned and controlled aspect of this program. Again, if you have something particularly unique that you're not sure about, we can talk about that separately as part of technical assistance with applications. Two notes on this one. One, in those cases where a nonprofit may have partnered with another nonprofit and shares ownership with a property, only one organization can claim the property. A property cannot be used twice. In most circumstances, there is still a controlling general partner in those situations. If you happen to be in a 50-50 ownership split with another nonprofit organization, you will need to determine which organization is counting those units. If you happen to be in a partnership with a for-profit, the nonprofit needs to be the majority controlling partner. They cannot be the minority partner in that partnership. They have to be the controlling partner. And then, as I noted before, only permanent rental housing is eligible. Facilities such as nursing homes, transitional housing, and shelters are not eligible for this program. They were not incorporated into the statutory authority. Moving right along, lots of information I know. Again, we'll post the PowerPoint so you have a chance to chew on all of the information. Eligible expenses. All right, the eligible organization must use the grant funds to maintain or improve the housing stability of tenants by expending funds on the following activities. And these activities are laid out in the statutory authorization. First, property maintenance, improvement, and security, providing services, including services and programs that promote economic and social mobility, efforts to attract and retain employees that will assist in providing services and supports to tenants. Probably the biggest one, forgiveness of all or a portion of rent balances owed by former or current tenants. And there is a general authority that at Minnesota Housing's discretion, other uses can be considered if they do have a beneficial impact on the housing stability of the tenants. And as part of the RFP process, there will be an opportunity to request an expense category that is not listed here, where the applicant can explain how they think it will have a beneficial impact on the housing stability of the tenants, and that will be considered as part of the selection process. Something to note that is very important with grant programs is that expenses incurred before the grant contract agreement is fully executed are not reimbursable in the program, with one notable exception. Past due rents with some certain parameters that I'm going to cover here in a moment, and that is related to a statutory requirement. It is not at the discretion of Minnesota Housing. So past due rent, where I think there would be a number of questions related to that, in which past due rent is identified as an eligible expense in the statute, which provides us with the flexibility for that particular type, is that the past due rent does have to remain outstanding. Also, if the rent balance was previously paid by any other local, state, federal, or philanthropic funding source, which could be the COVID-19 Housing Assistance Program, other federal emergency assistance, are not eligible for reimbursement. And simply, there can't be double dipping on units where that rent was already reimbursed by another program. But then also related to timing, any rent balances that were accrued and remain on the books, but it occurred before March 1st, 2020, when the federal pandemic emergency was declared, are also not eligible. It needs to have incurred after March 1, 2020. Also, if the organization does receive reimbursement for past due rent, it is necessary to cease eviction proceedings on those units and collections if applicable. Doesn't mean that's going to be applicable again to all of those units. And to the best of an organization's ability to inform the tenant that the past due rent has been satisfied. I recognize that there are likely to be situations where the tenant no longer resides in one of your properties. If there is a forwarding address, best attempts will be accepted there. We know that it's not going to be possible to reach out to all tenants, but we do want them to be aware if a past due rent has been satisfied. All right, the request for proposal, which I think is also going to be a particular source of interest for this program. Within the statutory authority, there were a number of references to being able to certify particular information. So we are relying on that statutory authorization to certify where we are able to. So I'm going to go over what that means for the different eligibility criteria that we have to evaluate as part of the proposal process. And then I'll just note that when we get farther along and we get toward the reporting and financial audits, that is a bigger part of it because it relies more on after the fact verification than necessarily upfront deep information. So first, let's just go through by eligibility criteria and the requirement that we anticipate as part of the application process. First, for nonprofit organizations that are tax exempt and have been doing business in Minnesota for 10 years, simply the documentation that formed the organization, Secretary of State filings. Will have a couple different options listed in the application materials, but basically the documentation that originally created the organization. If you're an organization that has changed name since then, simply including a signed letter noting what the name change has been, so that we're just able to track back and see when that organization originally formed and that it was at least 10 years ago. For the primary operations in Minnesota, as I noted on the definition before, this is a spot where the statutes allow us to certify. So what we will have within the application form is expecting the organization to certify that their primary operations are in Minnesota. We will not be expecting that organizations submit real estate schedules or other lists of properties that are included there, or necessarily doing all the calculations associated with that, but certifying to that requirement. And we'll have particular language around that. And as I noted, the federally recognized Indian tribes in Minnesota or their associated tribal designated housing entity are deemed to meet that requirement. One of the other eligibility criteria, as I noted earlier, is experiencing significant detrimental financial impact. What we will have there is we will ask applicants just to provide a narrative, just explain what that detrimental financial impact has been. We are not looking for submission at this time of financial statements or cash flows. That can be described in the narrative at the discretion of the organization submitting, but it is necessary to describe to some extent how the organization has been financially impacted the last couple of years. Similarly, for supportive service options, which are one of the eligibility criteria in the narrative, is to simply explain with a brief narrative the types of services that the organization offers. We will not be looking for a property by property listing of the types of services that are provided, but some level explaining of the types of support services that are offered, at least in a portion of the rental housing owned or controlled by our organization. And then for the rental unit type and the rental unit count to qualify for SHORP, those three categories that I referenced earlier, that you must own or control at least 1,000 units of naturally occurring affordable housing, or 50% of your rental units are rented to individual families with incomes at or below 30% of area median income, or at least 250 units of permanent supportive housing. Again, that will be a certification to sign where the applicant will choose at least one of those categories. It is not necessary to choose more than one category. You only need to choose one of those categories that you qualify and to certify that your organization does indeed have those units. Again, we will not be looking for submission of real estate schedules or other breakdowns of those numbers. And then we will also need to know the total rental housing units owned or controlled by the applicant, since many of you will have more units than what is necessary to qualify for the program. We'll need you to certify to the number of units that owned or controlled by your organization in the state. So there's two different numbers. And for that one, we actually do have to know the numbers. So if you have 700 units, there will be a spot to put in 700 units that you will certify that you own or control to that. Again, we will not be looking for a property listing as part of the initial RFP process. For the eligible expenses selection, as part of eventually the work plan and budget, is once we actually know how much money will go to each organization, and I will be talking about the allocation process here momentarily, is that we have to know which expenses the organization anticipates using. Since the organization will not yet know how much money they're getting until we get all the applications, this will simply involve the organization selecting one or all of the categories that they think they will be spending funds on. We will not be looking for a budget in the application materials, just which categories you anticipate using. It may change in the final work plan, and that is fine. So I anticipate that many organizations may choose all of the categories. That is also fine. The one open part there, as I noted earlier, is that if there is an expense that you would like to propose that is not listed, that will be the opportunity to do that, to suggest an expense that would help maintain the stability of the tenants within your portfolio. We don't need an expense with that, but we do need sufficient narrative to be able to make a decision on whether or not it is consistent with the statutory authority. If you don't have anything outside of those categories, that is just fine. All right, number 8, as part of the Office of Grants Management policies, we do have to ask for information for a financial review of the organization itself. Made reference to the Office of Grants Management policy on the slide. And this involves submitting an internal financial statement, an IRS Form 990, or a certified financial audit. If you don't have something that fits there, we do have some flexibility in different types of documentation that can be accepted. In this particular situation, it may feel a little bit circular because you are likely applying for the program because you do have financial concerns for your organization, but it is one of the requirements that we do have to request that information as part of the overall grants review process. And then last, but definitely not least, is a certification to the accuracy and agreeing to the various program requirements. Of course, you'll have an opportunity to review the program guide and application materials before submitting the application. But since much of this is based on certification, this is where we are relying on the organization certifying to the accuracy of all the information that they are submitting. It is our intent to have about as simple of an application process that is consistent with the statutes as possible. While we also do need to meet those statutory requirements and the Office of Grants Management requirements. So it's bringing those pieces together for the initial application process. Okay, the funding application formula. As I noted earlier, up to 50 million of grant funds available. There is a carve out to be able to pay for agency implementation costs. But the funds are allocated based on a statutorily defined formula, which is, it is the maximum grant amount is the lesser of the total number of eligible units from a single grantee divided by the total number of eligible units submitted by all the grantees, multiplied by up to 50 million or a maximum of 4,000 per unit. And yes, I'm going to show a numbers example because the words can be a little bit tricky to follow there. What is important to note, and it was implied earlier, is that the per unit amount of funding available to each grantee is not limited to the number of units that qualified an organization to participate in SHORP. So for example, let's say you're an organization that meets the requirement of owning or controlling 250 units of permanent supportive housing, but your portfolio, your total portfolio has 900 units. In that case, the funding allocation is based on the 900 units. So it's based on what the organization actually owns or controls, not what simply qualified them to apply for the Stable Housing Organization Relief Program. So I'm going to show two examples here. The first one I would define as the over-allocated scenario. So let's say, for example, 12 organizations, I suspect there will be more, but let's say 12 organizations are selected and they have a total of 22,405 units. And these numbers, just illustration purposes, I just pulled them out of the air with it for example purposes. We take each organization would get a percent of the total funds based on their percentage of units for the overall selected number of grantees. So if it's 22,405 units, you distribute out the $50 million, rather up to $50 million. Then each organization would get about $2,232 per unit. The allocation formula is not affected by the financial condition of the organization. So when I think back to what the narrative is, that does not impact the funding allocation formula. The funding allocation formula applies if the organization is eligible. Everyone gets the same amount per unit, which is why we have to know the total number of units that each organization is submitting so that we can figure out how much each organization will actually get as part of the process. The other scenario would be an subscribed model, or oversubscribed rather. The other one was over. You know what I mean. It's another example. In this case, there are fewer units, say 6 organizations with fewer units. In this case, it would result in more than $4,000 per unit, but the statutes apply a very hard limit of $4,000 per unit. So I think in this unlikely scenario, but I suppose possible, is that if the $50 million could go farther, everything would still have to be reduced down to $4,000 per unit. All right. Application review for board selections. So we're going to go through this process. We will issue the program guide. We will release the application materials. The organizations that choose to apply will submit their applications to Minnesota Housing. This will all be done electronically. For those, so once we release the RFP application materials, we'll have those instructions for how to apply and how to upload the information. But then agency staff will review all the applications first for eligibility that I reviewed earlier and for completeness. It is very important to have those applications be complete. Once the RFP process closes, we have very limited ability under the requirements of Office Grants Management and statutes to ask for additional information to make corrections or other changes. So when you're going through the application materials, when you have questions, you are encouraged to reach out for clarifications or if something fits or doesn't fit. versus waiting until after submission. It's better to ask the questions beforehand. So agency staff will review the applications for eligibility and completeness. We will then calculate the total number of rental units, the universe of rental units to be used in that allocation formula. We will then calculate the amount of funding per eligible organization based on that allocation formula, and staff will make a recommendation to our board of directors with those funding allocations, as I noted, anticipated at our October board meeting. That's where the board will then take action, which is a necessary step. After the board of directors approves the funding selections, the grantee will receive an approval letter with the funding allocations amount and any due diligence required related to the grant contract agreement. And then the grantees will need to prepare a work plan with a budget based on the funding allocation. I don't have a nice little form or example here for this one, but the work plan and budget, what it needs to do is identify the eligible uses that you expect to use, past due rent, property maintenance, those sorts of things that were listed earlier, and the anticipated amount that you think you'll spend on those categories. And there are provisions to allow changes, to allow funding modifications. If you think it's going to be $100,000 in past due rent, but it's $90,000 in past due rent and more in property maintenance, we have flexibility to adjust between those categories, but we do have to put together a budget based on that funding allocation amount. And that will be the core part of that work plan and budget that is attached to the grant contract agreement. So once that work plan and budget is done, we will then work with all of the grantees to execute that grant contract agreement. We'll provide samples of those leading up to the process so that you have an opportunity to review it. It is a fairly standardized template for those of you involved in other Minnesota housing grant programs. It's likely to look rather similar to those agreements, but then modified, of course, to fit the needs of this program. And then the grantee can start submitting requests for reimbursement, which I will touch upon here in a moment. And then, of course, at the very end of the program, the statutorily required financial audit and reporting, which again, I will still touch on. All right, so the grant contract agreement is executed. That means it is time to start submitting requests for reimbursement. The reimbursement process will be done entirely electronically. So no paper on that side of it. We will provide instructions on how to upload those materials. There will be a reimbursement request template that we will provide based on those budget categories. I'm hoping to do this on a monthly process, depending on the number of grantees, just so that we can do it orderly and process them as quickly as possible. And I also want to note that disbursements are paid to the grantee. And the reason that I wanted to note that is that some of the expenses are, of course, property specific. But how you handle that inside your organization, whether it is part of the parent organization's finances or you disperse it out to other properties, that is at your discretion. All the payments are made to the grantee itself for those reimbursements. For the reimbursements, we do have to collect some information to be able to verify the expenses. So going back earlier to those expense categories, property maintenance, services, efforts to attract and retain employees, we will be looking for, and the program guide will include a bit more detail around this, but an invoice from the grantee with a description of the services, the time period of the activity, and how the cost was determined, if applicable, a particular property name or address, again, for future audit purposes, just enough information so that we understand where the reason for the reimbursement. What we won't be looking for is that if you use the funds to buy light bulbs for a property, I'm not looking for the receipt for the light bulbs. We're not going to that level of detail, but we do have to have enough of an invoice from the grantee to be able to justify releasing the funds out to the grantee. For past due rent, there is more information that is needed there because, one, I anticipate that to be a primary source of the funding use, but also because it affects residents living at various properties. Again, the guide, once it is released, will have a little bit more information on this, but we will be looking for a rent roll by property with the property name and address, the unit number, what the past due amounts. It could be a ledger, something that just shows us that when those past due rent, when it was incurred, that it was after March 1st, 2020, that it is still on the books, something that demonstrates that it is a legitimate past due expense. We are not looking for resident names. We're not getting into the privacy aspects of that part of the data, but enough to know that it is a past due expense. We also, as I noted earlier, will be expecting that if there's collection efforts going on related to that particular reimbursement or an eviction proceeding related to that particular reimbursement, that those efforts do need to cease. And we do want organizations, I will repeat, to inform the tenants if rent has been satisfied on their behalf and is no longer due. Again, if a tenant does not have a forwarding address or you're not in contact with them anymore, we are looking for best efforts we know may not be possible in all circumstances. And then finally, as I've touched on a couple times, is that statutory flexibility that does allow us to consider other expenses that would have a beneficial impact on housing stability. Since we don't know exactly what that will be, we will figure out the documentation together that is needed to go along with it, but we will have to have some sort of invoice related to that particular type of expense. One of the questions that did come up afterwards as I was drafting the PowerPoint is if past due rent comes up after the contract agreement is signed, that is an eligible expense. So if you find in January 2024, you have a new past due rent for a particular unit, that is an eligible expense. It doesn't have to have been incurred earlier. It could have happened between now and when the program is done. And then finally, for the statutorily required reporting, there are 2 dates that are in the statutes, the first being September 30th, 2024, where it is required to submit a report and financial audit to Minnesota Housing. And then those reports do need to be delivered to the chair and ranking minority members of the legislative committees having jurisdiction over housing in January 2025. Those dates are not flexible. They are baked into the statutes. Related to that, the program guide, again, will have more information related to what we'll be looking for the financial audit and reporting. But given the relatively light application process, what we are expecting is that financial and audit and reporting to be able to verify various aspects of the program. So we will be including provisions requiring an independent accounting firm auditor. Most organizations already have one that does for organizational related expenses, but for them to be able to review expenditures on the budget categories, confirm the unit counts that qualify the organization for the program, and confirm the unit counts for the funding allocation formula. Again, should be information that all organizations have anyway. Confirm the properties and units that benefited from the program based on the invoices that were submitted, and then to issue that report for the agency. We will be allowing the cost of repairing that audit to be an eligible expense of the program. So we can include that in the work plan budget so that that cost is covered as part of repairing the report. Almost to the end here. We are launching the Stable Housing Organization Relief Program webpage very soon, maybe yet today. We will have a link that we will send out to all of the people that attended this program, so you don't have to go searching Google or other spaces to try and find that. There will be an opportunity to sign up for an e-news distribution. Please do so that we want to make sure everyone that is eligible for this does get the information to be able to apply when applications are due, program guides, all of those sorts of good things. And then we'll also be preparing frequently asked questions, likely based on a number of the questions that came up today that I may not have the information to be able to answer yet, because we want to make sure we have complete answers on those, but then to be able to share it with all potential applicants and program participants. The website that launches today will be fairly bare bones with the basic information, with more to come, but it will become the central source for sharing information on the Stable Housing Organization Relief Program. I know I talked a lot. I know that was a lot of information to absorb in one fell swoop. I do appreciate your patience. As we came through here, we do have a staff person that is, again, making sure that we're getting all of the questions out of the chat so that we're able to incorporate those into an FAQ. What I would like to do now is there are a bunch of questions. What I might first do here is just actually open up by raising hands. If you are part of Teams, if you have called in, we'll make provisions for you as well to take questions. With the caveat, I may not be able to answer all the questions on the fly. Please bear with me. We've been trying to absorb a lot related to the program, but we do want to get answers, and I'd rather get the right answer than guess on the fly. Does somebody have a question they want to say out loud first?
Okay, James,
Seal the
I'll
door.
write.
Yeah, yeah, please.
I'm not sure it's a critical one compared to some of the others that are in the chat, but in terms of the work plan, I understand the budget, that we just pick the categories, but what kind of a narrative or what are you looking for in terms of the work plan?
Yeah, there will be a work plan template. We want to make that as simple as possible. It will basically outline those budget expense categories and the amounts anticipated to be spent on those categories, but we can be flexible on those allocations. So this is not a 20-page work plan of how things are going to play out. Yeah, it should be relatively simple.
Thank you.
Yep.
Yeah, I have a question here.
Yes.
I've been working different states for African Mutual Assistance Association of Missouri, St. Louis, and then when I moved to Minnesota, I've been starting helping people for about housing, but we have worked hard during COVID-19 pandemic to present, and we are 501c3 nonprofit located in central Minnesota, St. Cloud. So we are not yet reached for 10 years. Or so, even we're not close. So, but still we are helping our community that for helping giving training, down payment assistance, looking with interpreting and translating the documents. And we are really did great job because we have helped 1,769 families during COVID-19.
That's excellent.
So,
thank you.
Across the state. So, and the way I have seen here, we are not still eligible. So do you think that this program make the rich organization to be richer, or even innocent organization will receive some as well?
Yeah, at least as related to this program, I'm afraid it sounds like your organization would not be eligible, and those statutory requirements for eligibility are not at the determination. We don't have flexibility to be able to change that 10 years requirement. It is part of the statutes. It might be, though, if you want to send me your contact information, that I can connect you with some other folks here at Minnesota Housing that may be aware of some other opportunities that are out there, but this particular program, it sounds like it wouldn't apply in your situation.
Can I still have my partnership, like big organization or 10 years or so, build it in Minnesota to be my co-sponsorship? Like if I go to like United Way or Initiative Foundation, or just to be my, because they are big organization. How can that's possible as well?
Sir, again, for this organization is that they also have to own the housing. So
Okay.
that is one of the key requirements, is that they do. So there may be opportunities for organizations to partner in some way. I'd have to think that through, but critically, it is necessary to own or control housing based on the three categories that I referenced earlier. They have to have at least 1,000 units of naturally occurring affordable housing, at least 250 units of permanent supportive housing, or at least half of their units occupied by families at 30% of area median income. So that ownership part is a key part of this particular program.
As assistant commissioner, we still need help. Our community are really suffering. A lot of people now facing for, I sent it Sarah to my documents, which 15 eviction have been stopped only last 3 months because of rental issue, rental go high, and the community are most of them low income. So we need your help to bring any program that helps this community, please.
Understood, and thank you for bringing that up and for the work that you and your organization are doing. And if you can email me your contact information, or I probably have it in the registration, I'll see if I can connect you with some other folks here at Minnesota Housing.
I'll do that. Thank you so much.
Yep. All right, I'm going to see if I can tackle some of the questions starting at the top that were put in there. Will we get the slides emailed to us after? We will post the slides on our website, but we will email you the link to the website, and then you can download the slides at your discretion. And then there was Cecile's question on the work plan. I think we addressed that one. Let's see. The next one from Jordan Grossman. Can the applicant become a nonprofit now, although they have been a landlord and in business for over 10 years? Unfortunately, no. The statutory requirement is the nonprofit has to have been in business for at least 10 years. The next question, Mary Durand. Why isn't traditional housing considered transitional housing, considered rental housing? The criteria are based on the statutory authorization requiring rental housing, of which transitional housing is not included in that definition. Another one from Cecile, slide 14, which I'll have to look back to see which one that was. What evidence of notification to residents? Cecile, what's your question?
Sorry, one of the requirements is that we need to notify residents that their rent has been paid and that we're not collecting. I just wanted, are we just certifying that we did that, or what are you looking for?
Yes, we will be looking for the organizations to send letters, to retain those letters, and then as part of the final financial audit reporting, to be able to have those letters available if they need to be reviewed. But otherwise, we won't be looking for other information in the interim. At least I don't anticipate so.
Okay, thank you.
What is the agency's definition of NOAA? If I recall correctly, there was actually a definition in the statutes, and we'll be including that in our program guide. We will have a definition in the program guide. From Davis Parker, on the rental type, the rental count, should we certify all that we think we qualify for, or is it better to select just the one that most strongly meets the criteria? So I think what you're saying is for the initial eligibility of those three categories, I would say choose the category that you think best fits your organization, that you're most comfortable certifying to. It doesn't, for the purposes of the program, it doesn't matter if it's 255 units of permanent supportive housing or 300 units or 3,000 units of permanent supportive housing. It's just more than 250 units, to use that as an example. So choose the category that you think fits your organization best, and that you can legitimately certify to, since it will be part of the final financial audit that your third-party auditor will look at and need to verify is indeed correct. Let's see, another question, does having project-based Section 8 disqualify units? Section 8 does not disqualify a unit from consideration. What is necessary, if it's meant to be for what qualifies the organization for consideration of the program, is the tenants living in there have to be at 30% AMI or less to qualify that unit for that qualification category. But a Section 8 alone does not disqualify a unit as being part of it, part of the program. Let's see. Sorry, I'm going through the questions here from Kate Page. Please clarify eligibility number 5. The nonprofit meets one or all of the bullet points. Kate, if you are there, if you can tell me which slide you're referring to, since I have so many bullet points in this PowerPoint, to make sure I'm referring to the right one. All right, I will come back to that one. For the next question, are eligible expenses limited to qualifying units, or can orgs use eligible expenses from non-qualifying units? So just, I think actually taking a step back on that. So the units that are qualified to get the organization into the stable housing organization program is wholly separate from the number of units that you may qualify for expenses on. So again, I keep going to the simplest one, the 250 units of permanent supportive housing. But if your organization has 2,000 units of various types, all of those 2,000 units can qualify for this program with eligible expenses, whether it's maintenance or services or what have you. It's not limited to just what qualify the organization.
Hey, James, just to interrupt a sec. What if the nonprofit owns some market rate units? Are they included in our unit count?
Under the statutes, all the unit counts owned or controlled by the nonprofit or the tribe, if the case happens to be, are included regardless of renter income limits. Is the unit count at a particular point in time or over a period of time? It is as of December 31st, 2022. That date. Right? What if the building is currently 501c3 but will be transitioning to being owned by a housing authority? Would it be eligible for this program? I'm going to keep that question and we'll consider that for the FAQ. Would non-paying tenants need to stay in place to collect the background from the grant proceeds? Getting into some specific questions. So some of these questions I am going to take just so that I get the right answers on. From Barb McQuillan, if a property has had a significant reduction in cash due to recent economic and social conditions, but still has reserves, is it considered to have had a significant detrimental impact? So I'm actually going to take a step back on that one as well. So we will not be looking at individual property financials related to this program. What we are expecting is that the organization can describe within the narrative of the application how the recent economic and social conditions have affected their organizations in a negative way. In that, you may choose to reference particular properties or particular situations, but we are looking broadly on that one, not to the level of looking if a property has reserves. I suspect, again, property owners have had a number of different experiences throughout the last couple of years, some of which may be related to cash flow, reserves, expenses, inflation. The statutes reference a couple broad categories in that, but it is not limited to one specific consideration. Let's see. Deanna Hamish is asking, does the requirement of 50% of the rental units for people at 50% AMI, and actually correction, it's at 30% AMI in the statute, or less based on a regulatory requirements filed against the property such as Allura, or can the nonprofit show that we are assisting 50% of the units? And I'll correct the text to 30% AMI. In this case, I am going to verify for the FAQs, but what the statutes refer to is the household actually occupying the unit, not related to the specific regulatory agreement. Mary asked if I would take the slides down. Done. A question, how many units a nonprofit should have to be eligible to apply for this program? Again, referring to earlier, the three categories, the at least 250 units of permanent supportive housing owned or controlled, 1,000 units of NOAA, or half of their portfolios serving households or individuals with incomes at 30% of area median income. Let's see, there's a question related to at 100% tax credit properties where they don't certify incomes. How would tenant incomes be certified for this program? That is a great question. I will consider that for the FAQ. And there's a few other specific questions related to housing supports. Noting that question, acknowledging it. From Caroline, is forgiveness of past due balances for charges other than rent eligible? For example, if a past resident owes rent, late fees, and damages, can the grant be used to forgive the entire balance or rent only? Excellent question, Caroline. I will get additional information on that one as well for the FAQs. And I think related to bad debt from past tenants be eligible. Similarly, a question from Cecile. From Steve Stanley, in all units owned by applicant, residential only, or would commercial units be included too? Commercial space does not qualify for the program. Commercial space and commercial related expenses cannot be included. A note related to the 10 years requirement from Linda. And some other questions that I'll need to look into. Oh, and then a great question. I think we'll close out with this one that will require some additional clarification from Davis Parker. I understand expenses are only eligible after a contract is signed, with the exception for previous unpaid rent, and then also with conditions noted. In the PowerPoint, is there an end date when we can no longer spend the grant funds, or is the 9/30/2024 report? So it is our goal goal to disperse all the program funds in time such that those reports can be completed in time for that financial report and audit. If that is not possible for participating organizations, we will work through what that timing looks like. I don't recall there being a specific statutory deadline, but with reporting due, the reports would then have to be updated, and I suspect many organizations, based on the need, may go quickly in terms of reimbursement requests. But it is our goal to actually have it done by next summer such that the reports can be completed. Lots of great questions in there, acknowledging the ones that I did not have a chance to review. And I'll note one final question. What is the earliest date for capital repairs to be eligible for reimbursement? Again, the expense has to have been incurred after the grant contract is assigned. So if you have an expense that is incurred right now for a maintenance request, it will not be eligible for the program. It is after the contract is signed. All right. If you have another question, we will still be accepting questions on this. Please bear with me because we're in the process of setting up an email specific to this program, but for the moment, it will come directly to me. With that, I welcome the questions. I want you to submit the questions. We will do our best to get them answered and within the frequently asked questions. With that, when we issue that, if you're like, oh my goodness, they missed my question, why didn't he answer it? What is going on? Please reach out to me. It's not intentional to skip over questions, even if I can't answer them all on the fly. We will again send out the link to the website with the PowerPoint and a record of the presentation. And just note, based on the questions and additional clarifications that go through here, there may be adjustments to the information that was shared today in the final program guide and application materials. All right, everyone. Thank you for your time. I know this is big, and I know this means a lot to a lot of organizations that will be eligible, but also recognizing for those organizations that aren't eligible, there is still a need out in the community that is not necessarily satisfied by this program. So thank you for your time. I look forward to working with you and watch your email inboxes for additional information.
Thanks, James.
Thank you, everyone.